AMC stock looks to be holding the 50-day moving average at the time of recording this video, heading into the end of the trading day. We have actually bounced from the lows on AMC around this moving average, so this is looking very positive. Like I indicated in the last video, if you guys have not seen this, today is really one of those big days where you're testing this moving average. We have found so much support above over the last 3 weeks. If we were to flush down under this by the end of the day and see a solid red candle under this moving average, well, we might be talking about a bearish point of view or a bearish outlook in AMC stock, but it does not look to be that way. AMC, in the face of the markets consistently going down today, has found a way to bounce at this moving average, guys. So we're going to talk about that. We're going to look at the Ortex data, but another thing that I do want to look at is this. Did Sam Bankman-Fried's FTX manipulate AMC stock? And it's basically, we're not even going to try to summarize it because there's a lot, but they're kind of looking at the cost to borrow rates. On the day that FTX went insolvent and went bankrupt, the cost to borrow rates on AMC stock increased about 400%, and that might not be a coincidence, guys. So let's get straight into this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in that comment section. Most importantly, guys, let's get into this information. So let's talk about today. What is happening today in the markets? If you guys are unfamiliar, Jamie Dimon is JP Morgan's CEO. Say that fast a couple times. Try not to mess it up. Jamie Dimon is the CEO of JP Morgan. He has been there for over 20 years now, lived through many crises, right? The financial crisis, the COVID crash, the crash in 2018, 2014, been through a lot of shit with JP Morgan. And he comes out and says that inflation is eroding consumer wealth that may cause a recession next year, and that consumers have 1.5 trillion in excess savings from COVID pandemic stimulus programs and are spending 10% more than in 2021. And he goes on to say that by the second half of next year, those savings are going to be gone. And as we reported in essentially 2 videos ago, JP Morgan, or even in the last video we touched on it as well, JP Morgan also lowered their 2023 earnings forecast for the S&P 500, citing weaker demand and pricing power, margin compression, and limited buybacks. And we did the math for you guys. The estimate was for $2.25 EPS, earnings per share, $225, I should say, of EPS on the S&P 500 next year. If you times that by about 17 or even 19, you're going to be looking at about 428 on the S&P. You times 225 by 17, which is roughly where we are trading right now, you're looking at 382 or 383 on the S&P 500, whichever one you want to round up or down, that is on you, but still would be about 2 to 3% lower than where we are currently trading at, and that's at a 17 times PE. If you go down to the historical average of the S&P in between 13 and 15 with this new updated price target or expectation for S&P 500 earnings, you go down to 15, you're looking at an S&P 500 that is trading at 307 on the SPY index, or 205 with a 17 times P. You're trading at 349, so around the lows of 2022. And JP Morgan, Bank of America, as well as Morgan Stanley all expect the S&P to retest and go under the lows of 2022, and that would be about a 20% drop from here. So these major banks are predicting this drop in earnings, and you are seeing that having a big role to play in the equity markets over the last 2 days. Yesterday was not a very positive day. It led AMC stock down almost 9%. Today is no different, also leading the stock down quite a bit. Like I said, holding up a lot of bullishness around this 50-day moving average, guys. But nonetheless, the markets today, if we take a look at bond yields are actually falling again today. TLT is rising, and this correlation is very unnatural because when TLT has went up in the past, you have gotten these rallies in 2022. Like, look at this rally in August of 2022. The bond yields fell quite a bit in a very short amount of time, and the equity markets went absolutely parabolic. Well, the problem is, if yields are falling and the markets are not rallying, it's more than likely due to recession fears. And believe it or not, if you pull up the federal funds rate chart, we'll go ahead and do this right now. Go ahead and do this right now because it'll only take a second. The stock market doesn't tend to fall, really crash until after the Fed starts to cut rates and right when a recession actually happens. You could see this in the 90s. You could see this in the dot-com bubble. The markets were rallying the whole time the Fed was raising rates. Not this year. The markets have been falling, but we aren't even pricing in a recession yet. So that's what you're seeing now, is the market starting to price in that recession, and they're falling because of it. All throughout 2022, we have not been falling because of recession. We've been falling because the Fed has been raising rates. And as you can see in from 04 through 07, I think this is the best example of this. The markets were rallying the whole time the Fed took the federal funds rate from 1% in 04 to 5.25% in 07. Markets were ripping. This was one of the best times to be an investor in the markets. And then what happened? Obviously, the financial crisis came and stocks went down, and they essentially didn't bottom until about the end of the recession. They actually made their official bottom a couple months before the end of the recession, but nonetheless, stocks were falling during a time where the Fed was cutting rates. So in a weird way, the more dovish the Fed gets from now, until this recession comes, the more fear about a recession we might actually get. And I know not everyone's going to pick up everything here in this video. We're going to talk about it, guys. We're in the early innings of this, and I do think if you're looking to hedge out your portfolio, you're still in the early innings, guys. So there's probably a lot more pain to come in the stock market over the next couple of weeks, but at the same time, that could also be a bullish thing for AMC, as it will help to squeeze out shorts out of their short positions when they see their margin requirements go through the roof. Now, if we take a look at the option activity for the day, 45 orders totaling $3.58 million, positive order value of 54%. So that is very bullish. The fact that you are down about 9% right now and you're seeing a positive order value of 54%, I think that in and of itself is bullish. As far as the short interest, sitting at 20.36%, 105 million shares sold short. Cost to borrow max sitting at about 40%, cost to borrow average at 28.71%, and cost to borrow minimum at about 1%. If we take a look at this article talking about FTX and if they potentially manipulated AMC stock, this rumor came from a report from the Chainsaw, and they claim that FTX may have been used to manipulate the price of AMC Entertainment stock. A leaked FTX balance sheet showed no ownership of AMC. AMC stock is down more than 70% year to date. The interesting things about this is the Chainsaw had previously reported that it discovered a contract for a total supply of 525,000 wrapped AMC tokens that were listed on FTX. This contradicts previous reports that stated there were a total of about 400 million tokenized AMC shares and raises concerns as to whether FTX owned the underlying AMC shares. Experts have noted that synthetic stock could have been used by hedge funds and other institutional investors to manipulate the price of stocks without attracting attention, per the Chainsaw. Financial analyst Peter Han says the following, quote, "When you borrow shares to short, your broker has to claim that they can locate. If some stupid crypto exchange says they have 400 million AMC shares, then maybe the broker claims they can easily find them." And that is pretty clear to see. And there's obviously something that was going on with the situation. But then these next couple of paragraphs, we'll read the first two right here, but really when it comes down to it, you could see the cost to borrow rates went significantly higher after FTX went bankrupt. So it says, how exactly did FTX's actions contribute to the possible manipulation of AMC? Stockbrokers charge a borrow fee when short sellers bet against the stock to provide the short seller with borrowed shares. When borrow fees are high, it becomes more expensive to short a stock due to the lower availability of borrowable shares. This could have caused institutional investors to argue for a lower borrow fee due to the existence of tokenized AMC shares, which may have eased the availability of located shares. Between the end of August and early November, the borrow fee for AMC averaged 18%, according to Chainsaw. However, after November 8th, the borrow fee rose significantly, reaching 55% as of November 10th. Keep in mind that former FTX CEO Sam Bankman-Fried revealed the exchange was insolvent on November 8th. Did FTX manipulate AMC stock? And I think the long story, the long summary of this made short is probably. Will we ever know exactly? Probably. Will it happen soon? Probably not. So I think some of this bullishness that we have been getting with AMC and the cost to borrow rates that obviously went much higher right after FTX went insolvent, and keep in mind virtually no other meme stocks cost to borrow rates did what AMC did. No other meme stocks cost to borrow rates went up 400%, let alone even 50% higher like AMC's did after FTX went bankrupt. So I think all the signs point to, yes, there was something going on there with AMC. And I think when you summarize all of it down, I think it's going to mean the stock is going to have more fuel on the fire to move higher when the right time arises. And I do think the right time is right around the corner, especially if the markets continue to fall. What has been happening in the crypto markets? Why has crypto been getting destroyed? Well, that's something for its own video, but what has been caused out of that is liquidity problems, and that has also been spewing into the short sellers that have these short positions, because after all, guys, there's only so much money to go around. Now, there is basically that. As far as economic data that will be coming out tomorrow, we're not going to have a whole bunch at all, but you do have the balance of trade for Canada, as well as the Bank of Canada interest rate decision that I think will be important as well. And it's probably going to move our markets in a big way, especially if they even keep rates flat or cut rates slightly. If that were to be the case, any central bank that is starting to cut rates right now when inflation is super high, that's going to be a very negative thing. And just the proximity of Canada to America and how much business we do with them, that will be important. It can affect things. But with AMC, you really want to watch if we can close out the last couple of minutes of trading above the 50-day moving average. It looks like we're 2 cents under that right now, but that would not be, in my definition, a clean break of that. If we're floating around this by 5 to 10 cents, I don't think that is categorized, at least in my book, as, you know, breaking the 50-day moving average, changing the trend. Now, if we close significantly under that, which would take AMC down 15 to 20%, I doubt that's going to happen here in the last couple of minutes of trading, but if it did, that would be a different story. So I really want to watch around $6.50 per share for that actual confirmation of the change of trend. But as of right now, it's still looking very good in my personal opinion, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in that comment section. Thank you for watching. I will see you in the next one.